Nike's new CEO, Elliott Hill, came in with the tough turnaround task at hand. The previous CEO had taken on a multi year strategy of deprioritizing wholesalers and distributors, and that turned out to backfire against Nike as competitors stepped in, took that shelf space, took that market share, and Nike's plan is not working as well as it initially thought it would. And so the CEO lost his job, and now Elliott Hill is here to try and fix it. So we got some early evidence of the initial strategy of the turnaround, how it's going. And I think it's really important for investors to follow closely those that are kicking the tires around of Nike stock and trying to see if it's a buy right now, if it's a buying opportunity, really should understand because turnaround investments are riskier than usual than if you're just investing in a company that's going along as expected. When you're investing in a turnaround strategy, there's greater risks involved, so there should be more due diligence. So let's take our steps in conducting the research.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Nike's new CEO is saying that we're beginning to drive a more diversified portfolio. It'll take time to reach the volume to replace the handful of classic franchises we over-indexed on. So one of the things the new CEO is also focusing on, as well as uh, reinvigorating the relationships with wholesalers, is to diversify away from specific franchises that they were leaning on too much. Things like Jordan shoes, for example, which the company had benefited from significantly, continuously bringing back older styles that are still popular and really leaning on that Jordan brand. Now, the CEO wants to diversify, wants to have a broader portfolio, and has taken initial steps to build that out. So one of the early results we got was on their new 24/7 collection, which brings performance materials to high style training apparel. And the new impossibly soft and perfect stretch fabrics gave them the opportunity to tell a deep and technical apparel story. And so this is more along the lines of what Lululemon has been great at innovating across materials, innovating across this technology of apparel. And Nike, seeing the success of Lululemon, is trying to take a step from their playbook. And the early results, the first month of sales in 24/7, have exceeded our expectations, and we're ramping up capacity to meet the demand. This is the kind of stuff you want to hear. This is the kind of early news, right? It's still very early, still small, but you want to see these kinds of results early on in that we're trying this, we think it's going to work, and then you get the initial feedback. Oh, it looks like it is working. It's working better than we expected. And so that's the kind of things you like to see. Instead of, it could have been like, we tried this, and then they come and report back to you and they say, look, we did an experiment. We thought it was going to work, but turns out it's not going to work. And so we're going to shift our attention to something else. That's not the kind of news you like to hear. That's wasted time and energy and money that you would have liked to have delivered better results. And so this is the type of thing you like to see. And it's good news for Nike investors that the new CEO, one of the first new launches, one of the first new products categories, is already working well. That's a good sign. That's a good sign. So the CEO also took pains to highlight Nike's presence worldwide. So in the almost 190 countries that they do business in, they have over 40,000 points of distribution and the digital business with massive reach. Their footprint is unbeatable. It's an unbeatable competitive advantage. And I agree with the CEO in when the previous CEO was talking about deprioritizing their wholesale partners. I was skeptical in that I didn't understand how or why they wanted to do this. Now, there was a clear strategy behind it, and the previous CEO did a good job of explaining that. The clear reasoning behind it was, look, when we sell products through a wholesaler, we have to sell it to them at a lower price, and then they go and they sell it to customers. And so eventually our product is reaching customers, but through when we do it through wholesalers, we're receiving a lower price and we're receiving lower profit margins, and we're not controlling the entire customer experience. And so we want to deprioritize that. We want to go directly to consumers, and that way we can receive a higher profit margin because there is no middleman to deal with, and we can control the user experience more comprehensively, and thereby delivering a more consistent and more higher quality user experience from start to finish. That was the thinking behind deprioritizing this distribution network. But I was skeptical in that if that direct to consumer connection with the higher margins that it entails and more control of the user experience would offset the benefits that you would be losing in the decades you've spent building these relationships with distributors that are selling your products, that have brick and mortar facilities that they pay rent for, that they maintain, that they staff, and they train the workers to sell your products, right? That was an advantage. And so you're not just gaining a higher margin without giving up anything. And it turns out now, of course, hindsight is 2020, but it turns out now that the losses from that distribution network outweighed the gains from the higher margins. And then, oh, by the way, on top of that, when you exit, like let's say you had 5 shelves in a retailer dedicated to Nike products, and then you tell that retailer, look, we're only going to send you one shelf worth of product. You decide what you're going to do with those other 4 shelves. You open up a space where now that wholesaler is going to go talk to Adidas, is going to go talk to Skechers, is going to go talk to these other shoe brands and apparel brands and Puma and others and say, look, we've got some shelf space now available that Nike just gave up. You all want to step in. And they did. And they stepped in and they took market share. And that is now evident in Nike's latest quarterly report, where they reported declining sales of double digits almost across the board in every region they operate, in every category they operate. So that's where the thinking was. And I can understand the thinking behind it, trying to get higher margins and control the user experience more comprehensively. But what you gave up, what you had built over decades, you gave up too much in order to go for that direct to consumer. And I like to see that the incoming CEO is going back to that and saying, look, these wholesalers, these distributors were an advantage for us. And we built that over decades and across countries. And now we're going to go back to that. We're going to emphasize them more, and we're going to deal with them better and more effectively to regain their trust and regain their energy and their enthusiasm for helping to sell our products, right? Because that's what they did. They sold Nike products. They earned their fair share of profits in the process, but they also helped Nike's business, which Nike wants again. And and now that we've seen evidence that the other strategy didn't work, now they can be more confident that this strategy is the better one because they tested it. They spent several years testing that other strategy. It didn't work well. And that's not, you know, zero value, right? Testing something, even though it hurt your business, was not a complete negative. They still have the information of what worked from that strategy and what didn't work, and they can use those learnings in now crafting a turnaround strategy to return the business to its glory days from 2019 and before. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.